Welcome to the Asset Coach and Tax Strategist YouTube channel. If you're a subscriber, thanks so much for subscribing. If you're a first-time viewer, thank you for spending your time here with us. If you like our content, please give us a thumbs up. For you new folks, Asset Coach Tax Strategist YouTube channel is based on the book Economic Termites. This is a book that I wrote a few years ago talking about taxes, inflation, time, laws, and regulations. Also, I wrote a second book called Farming Assets. Those two books is really what this whole channel is about, addressing those situations and how they affect you and I in our ability to grow our wealth. So, as an asset coach and tax strategist, my name is Robert Wolf. I am the CEO and founder of Terra Firma Business and Financial Consultants and its affiliates. We have a bunch of companies that we've built out this ecosystem surrounding the basis of what we talk about on this YouTube channel. So, if you're not a subscriber, hit that subscribe button. We drop episodes every Thursday. Again, if you are, thanks so much. And let's get into this next episode. All right. Welcome back to another episode of Asset Coach and Tax Strategist. And so in this content today, in this video, I'm going to go over kind of review a little bit of what I've gone through in the past. But I think this is really important because a lot of us don't really know what's happening with this dollar reset and what's going on with gold doubling in price, what's going on with the Bitcoin, and then also what's going on with the Federal Reserve. There's a lot of stuff behind the scenes. Now, when I say behind the scenes, and what I mean is there's stuff happening that's not being told to us by the current mainstream media. But if you know and you have the right avenues of looking for things, it's usually the independents on YouTube, right? But from that standpoint, you also got to be wary of the fear mongers and those that are just trying to look to build their channel and monetize their channel. There's a handful of guys and gals that I watch across, whether it's political, whether it's economic, whether it's investing. I have found over the last few years, there's a handful of people that I like to hear. Now, I don't trust them blindly, just like I don't ask you to trust me blindly. But with all information, it's very important to understand that as we get information, then it helps us kind of form our own opinion and thoughts of, what should I do? And so I want to share a little bit of what's been going on and with this whole conversation about U.S. debt. And I think what's happening right now is mainstream media is pushing for this this political economic reset, if you will, pushing. So you're going to see a lot of stuff talking about how, economically we're in a worse situation back in compared to 2008. And there's some truth to that. But the reality is the truth to that is because of regulations that were created in 2008. One of the things I talk about is that when there's let's use the word failure. When there's a breakdown in a system, you need to allow this system to fix itself. So, for example, when you and I cut ourselves, what happened? Did we just cut off the arm and remove it if I got cut on my hand? No. What's the body do? The body heals itself. Now, we can accelerate that healing by stitching it so it doesn't overbleed a lot, right? But at the end of the day, the body is designed to heal itself. And that is the same thing with capitalism, with the markets, with the economics. It's designed to heal itself unless we get in the way. You've heard the story about a butterfly. If a butterfly struggles to get out of cocoon, and if you were to open up the cocoon to help the butterfly, what would happen? The butterfly would die. The whole point of the struggle is to build strength for the butterfly to be able to go live and thrive. Same thing with plants, like a rose bush. If you want your rose bush to grow and be healthy, you got to prune it, you got to trim it, you got to cut it down so it grows back better. Okay. And that is it's just a function of humanity and life and how God created what we are. He created us to be able to redevelop ourselves. And because we're human and we can do that, the systems we've designed do the same unless we get in the way. And this is really what happened in 2008. The financial crisis was driven based off of false investments, so to speak, right? They created these derivatives. They meaning the banks and the investing system. They created these derivatives. They would create these mortgages. They would package these mortgages up, sell them, and then the new buyer would do the same thing. They'd buy a bunch of these, repackage them up, and sell them. And all of a sudden, you have this house of cards where the original was somebody's a bunch of mortgages that people were paying. And so, if you've ever bought a house or if you've ever financed, what happens within the first few months? Your loan gets sold to another institution, and it happens over and over again to the point where sometimes you're like, I don't even know who I'm paying anymore. That's the system that was created. Well, what happened back then is that it was a house of cards and it was so fake, and it ended up crumbling. So what the government did is they came in and said, we're too big to fail, right? And so what they usually do is they band-aid regulations on top of regulations. And 2008 happened because of regulations. And so all of a sudden we band-aid a bunch of these things and create these regulations. And all of a sudden here we are 2 decades later dealing with that over a period of time. And this puts the Federal Reserve in a position of immobility. And what I mean by immobility is regulations stifle everything and everybody. And so you have the banking system that's really confused with what's going on and how are things supposed to progress. So, for example, some of you may have heard me talk about the IRS. Imagine the IRS and what's going on with the IRS right now. We'll just use them as an example. So, when Trump was in office the first time, and in 2018 when the tax relief bill came out, it caused havoc. Why? Well, because there was a lot of tax changes, right? There's a lot of law. There's a lot of tax changes. The IRS had to go interpret it. They had to go implement it and fix it and make the adjustments so they knew how to collect dollars for the government. Well, then what happened in 2020? So just a few years later, we had COVID, right? And we had this shutdown. The IRS was shut down. They had how many millions of pieces of mail weren't getting sorted? Okay. They come back. Then there's high inflation. And then the new administration comes in and reverses a lot of what Trump had done. So that causes havoc at the IRS. We're going to build up funding and we're going to hire a bunch of people. And then now we have a new administration and we're going back and we're firing a bunch of people and we're doing all this. Then we have government shutdown. We have one big, beautiful bill, another tax bill. And what's going on with the IRS right now? Complete chaos, if you think about it. I mean, think about your life when all of a sudden you get a bunch of things happen in your life at once and you got to go to different parties or get-togethers or family coming in, friends coming in, you got work, you got a project, you got kid stuff, and you're like, holy cow, what do I do? Now imagine the IRS with 150 plus million taxpayers and way more pages than taxpayers imagine that's got to be complete chaos in systems that really haven't updated themselves year over year. It was kind of funny. I was talking to one gal from the IRS. We were trying to deal with something, and she's like, Bob, she's all, sorry, you just got to understand that you remember growing up. She knew my age, so she knew she was a good, we were a good audience for this conversation. She's like, remember when we grew up and we had these computer screens that were green screens? They're square. They weighed about as much as a house weighed. And I'm like, yeah. She's like, some of the departments in the IRS are still working on those types of screens. And so whether she was kidding or not, and she was just using that as an analogy of how bad the systems are or whatever, I don't know. I wasn't there. We weren't on video chat or anything like that. But I thought it was pretty comical because that really kind of, if you think about it, there's a lot of truth to that. There's a lot of truth to that. And how could there not be truth to that with the amount of changes and chaos that happens? Now, I bring all this up because I think this is extremely important for us to understand some of the changes that are happening. So what I want to do is I want to share my screen. And I want to talk about this whole debt conversation. And we're going to revisit a conversation. And I'm going to show you what I've done, and then I'm going to show you what Governor Miran, a new governor of the Federal Reserve, has talked about, and there's a lot of shakeup, chaos at the Federal Reserve as well. But this is comes from visual capitalists, and if you're a frequent flyer of my channel, you know I use their visuals a lot. I love their visuals. I think they do a great job, and they actually creates a lot of good ideas of content to how to explain certain things. So the biggest buyers of U.S. debt. This is as of June 24th to June 25th. So we have the Cayman Islands, we have Belgium, we have the United Kingdom, we have France, Canada, and Japan. Okay. Now look at right here, number 7, stablecoin issuers. So stablecoin issuers are crypto. And what they do is that that's supposed to be a dollar for dollar. It's like a money market, right? When you're in a brokerage account and you put money in a money market, it's supposed to be dollar for dollar. Now, sometimes there's higher interest rates and that kind of stuff. Well, why is that? Because it's based on the bonds and what they use as cash equivalent for the money market. The same thing here with stablecoins. Stablecoins are like a money market, but in the crypto world. And so they need to have cash-like assets. And so there's 41 billion. Now this is in that time period. And right now crypto is it's a run on the bank, if you will. They're having about a week and a half, 2 weeks of hard times. And the reality of that is I think a lot of that is manipulated. I think there's some purpose to that because of the drawing down of Bitcoin and Bitcoin being the new gold and digital currency gold and all these different things that you and I hear. And so there's truth to a lot of things, but there's also there's a lot of things that are exaggerated, so to speak. But you could take a look at this and you can see what this looks like. But the main key is that the stable coins. So there's an entire area of economics that is trying to build upon here. So what I did is well, okay, there's a lot of this conversation about U.S. debt. What's this look like? And so what I did was I went to ChatGPT. And reason why I'm showing this to you, this actually is showing stuff that I've done in previous episodes. I said, show me in a graph who owns the most U.S. Treasury debt. Very simple. Okay. And so this top right graph here, who holds U.S. debt, this is an episode that I did on using visual capitalists. That's this top right here. Okay. Now this other one here is holders of U.S. Treasury securities. You can see that there's an individual, pension funds, foreign nationals, and monetary authority. Look at the black. Is the black 50% or more? No, it's less. It's only 36%. So only 36% of the U.S. debt is owned by foreign or international organizations. The other, what's that, 64% is owned by U.S. individuals, pension funds, monetary authorities, meaning agencies, internal investments. Okay, so debt is still debt, right? If unmanaged, it could get out of control, right? But I think there's an interesting aspect of this. And so if you can look at it, you can see that there's a substantial portion of U.S. debt is held domestically by U.S. institutions such as the Federal Reserve System. And the Federal Reserve System, this is part of 2008 regulations, this quantitative easing. Remember what I was saying? Sometimes in 2008, we created so many regulations, we didn't allow the system to actually fail. Now, we were so worried that it would collapse like Y2K. Remember Y2K? The world was going to end, right? And so what happened? It didn't. So, but Bob, there would be financial turmoil around the world. Okay. Yeah, there probably would be. So you can't slap a Band-Aid or duct tape on Band-Aid and duct tape that's already there. Okay? Because if you have a cut, if you have an open wound and you put Band-Aid on it, it's to help it get health healed and to not allow dirt and bacteria to get in there, right? But what if that Band-Aid gets old? What are you supposed to do? You're supposed to remove it. You're supposed to put new and you're supposed to clean the wound, right? You're supposed to take care of it. But what if all of a sudden you just put a bigger Band-Aid on top of that, the old Band-Aid, and the bigger Band-Aid on top of those old Band-Aids, and you just kept doing it? Would you develop an infection? Probably. There's a great chance that you could. When all you had to do is rip that Band-Aid off. Yeah, you're going to pull off some hair, but you got to clean that wound, clean it up, make sure it's healthy, and then you slap a new Band-Aid on it if you need to. But if you don't need to, because you're looking at it, you're like, oh, okay, well, it looks pretty good. I'm going to let it get some fresh air. I'm going to see and make sure it's okay, right? Maybe put a little Neosporin on it or something like that, right? But instead, what the government did was that they slapped a bigger Band-Aid on it, and then a bigger Band-Aid on it, then a bigger Band-Aid on it, and then they're wrapping it with gauze, and they're doing all this stuff, and they never looked at the core issue to see if it was okay, because you can't see it. And that's what happened in 2008 was there was a bunch of regulations that got slapped on. We had 2008 financial crisis, and then there were more regulations that were slapped on, and it caused issues in the banking system. And who's in the banking system? The Federal Reserve, large national banks, and then regional banks. And what happens is that we go through this system of regulations, and the regulations help the bigger, because regulations cause the smaller not to be able to afford doing business. And you saw this with smaller banks. So what happened to smaller banks? A lot of them ended up going out of business. And larger organizations like regulation in the sense that it makes it more expensive for newer businesses to get started and open up, which means competition. And so the larger businesses have the ability to withstand that additional costs because they have a lot of money. They absorb those costs. And slowly they create a monopoly. And right. And I'm not saying that's what's actually happening, like there's a monopoly happening, but when you think about the national banks, there's a handful of them. There's a lot of regionals drive around your city. There's a lot of regional banks. Those banks have a harder time doing certain things because they're just a regional. They don't have trillions of dollars of assets or billions and hundreds of billions of dollars of assets like some of these other banks do that can withstand some of these regulations and these costs and expenses. Why am I going through all this? Why is this important to you and I? Because you and I need the banking system. We need the the lending system. We don't need the Federal Reserve, but there's some jokes about that I'll save you from. But we need the system to create the liquidity. So what happened in the small business world is because of these regulations, it made it difficult for small businesses like us to go get bank loans. So it created an entirely separate lending system, private lending system. We call it hard money loans, but you have private investors now lending money, but at higher rates. We're talking like 20 to 50% rates. When all we had to do was have banks allow small business owners to go and do this. But with all this regulations, it was not a cost effective for a bank to do certain things. And so as a business, what do? You either make a decision and say, well, this is good for us to offer this. And oh, this product is expensive for us, but it leads to all these other products. So we're going to keep it. But what did the government just do? They just stopped printing pennies. Why? Because it was cost prohibitive. It was costing more money to print a penny than the penny was worth. Even though over the years, they changed the metal composition of a penny to be less and less valuable as a metal, and it just is a coin now. It's tin. To the point where that was even ineffective to make. So they stopped. That's business. That's what happens. But when you get regulation over regulation, it causes breakdowns in the systems. Okay. And so the subprime market is one of those marketplaces. And so what's happening is the Federal Reserve is holding on to assets. It created these things where, hey, we're going to print money for banks. But what they did was say, hey, banks, hold it here at the Federal Reserve and we'll pay you an interest. So banks were making money off taxpayer dollars, interest, right? And the Federal Reserve's holding on cash that can't be used. But they printed this liquidity. It just didn't go out into the marketplace. So it created liquidity, but it didn't go in to create productivity. And that was the issue. And that's what kept compounding. So when we go back and looking at this, who owns Treasury debt, go look at this. Take a look at this on your own. It's interesting because at the end of the day, this is important to know. But here's the most important aspect of why I'm going through this is I want to bring up the next thing. Let's see here. Is a recent speech, November 19th. This is the Federal Reserve's website. Regulatory dominance of the Federal Reserve's balance sheet. Governor Stephen Moran, he's a um, new governor, and he goes to this document. And you may not understand this document, and I'm not going to spend time going through it. What I want to do is I'm going to put in the comment section a link to Heresy Financial. Joe Brown is one of the YouTube channels I watch. He used to be a stockbroker, has built out his own channel. He's got about 300,000 plus viewers. But he goes through this. Now, not everything he says do I agree with, and that's in most cases, in most situations. But what I want you to do is, if you want to go through this document, watch that. He'll break it down and he'll translate in language of what's happening. In a nutshell, there's too much regulation. And so what this new governor is doing is saying, we need to break down this regulation. Now, when the government does something, we always have to stand back and go, oh, hang on a second, what's happening here? And I think there's some truth to that here as well. Why are they talking about deregulating the banking system? I think it's to create more liquidity, but also it's to adjust the value of the dollar, to adjust this whole reset of what this debt looks like with the US, which, by the way, again, less than 40% of it is owned by foreign countries, which we're made to believe they hold most of it. So I just wanted to share this information. I just find it interesting as a high level purpose and understanding this conversation and this dialogue. And why? Because what's economic termites about? What are the four main termites? Taxes, inflation, time, laws and regulations. And I always say laws and regulations is the queen termite. The politicians change the rules as we're playing the game. But part of all that, it leads to debt, liquidity, leverage. Used appropriately, it helps you. Used inappropriately, not measured, not planned, can hurt you. When do you know what that you won't know until you're there. You won't know till you're there where you go, ooh, our debt's now a burden. And that's where the US is at. But now, a lot of things that we're hearing, they're not saying, hey, less than 40% is owned by foreign countries. The majority of debt is held domestically. What's this look like? If we were to do a reset, how does that affect current 60% holders domestically? That's the key. But China's selling off US debt. So, as you saw on my list, they weren't even on the list. We don't care. But Bob, what about gold? What about gold? What do we keep hearing over and over again is that there's new reserves, new mines discovering gold. Compared to Bitcoin is finite. There's only 21 million coins. Supply and demand. Gold has a value that we've created as an intrinsic value of what it is worth. But if you go mine more, what happens? It increases the supply. What happens when there's more supply? It reduces the value because there's less demand. If you slow down, what's that do? That increases the demand and therefore it increases the price. So there's a balance, right? There's a balance there. And that's why gold is somewhat still able to be manipulated like most currency. So if you watch my last episode where I talk about decentralization, is at some point in the decentralization conversation always lead to centralization, right? And so we have to be just mindful as we go through this planning process, as we go through things and having your wealth plan being diversified in multiple aspects of assets, but also understanding the tax code of how the IRS communicates what's the most efficient. If your tax burden is heavy, then your banking and all these other things are going to be heavy as well. You need access to capital. That's the key. to running a business is access to capital, period. You need money to make money. That's why when people say the wealthy get wealthier, that's true because they have money to make money. But that doesn't, people say it like, oh, I can't get there. Yes, you can. Sure, it may take a lot of work. You may have to do certain things and change. Sure. Everybody has access to the system, but choices in your situation may give you less access to certain parts of the system. And that's why cryptocurrency has become so popular and decentralization is because those that are what we call the unbanked, meaning people who do not have access to the banking system because the banking system will not give them access. So you have all these micro loans, and this happens a lot in the international world, which has created that loan system that I was talking about for small business, hard money loans, where the cost is more expensive. Microloans are smaller loans. They're not as expensive, but they're designed to be able to help people get that opportunity that are unbanked in a system of getting to that next level, whatever that is, and wherever they're at to survive. There's connectivity to everything we do. So, anyways, hopefully this was helpful. Again, it's just kind of form of some thoughts and things that I've been watching, and that I think it's important. And really no kind of like bottom line point of be wareful or watch for this or go hide, lock the door or anything like that in this episode. But more of interesting. There's steps being made that I think you should be aware of that you're probably not aware of, which is the whole point of this channel. So thanks for subscribing if you're a subscriber. If you're not a subscriber, feel free to hit that subscribe button. We drop episodes every Thursday. If you have any comments or give us a thumbs up to the content, we greatly appreciate it. Thank you so much. Have a happy Thanksgiving. And by the time you watch this, it probably was Thanksgiving. So hopefully you had a great Thanksgiving. And here we come. The new year is on its way. Thanks so much. Make it a great day.